What's up, guys? It's Rob here, and we need to talk about BBIG because this stock pumped up huge yesterday, and a lot of people were expecting that it would pump up massively today as well. We did see a little bit of a pump, but we've since subsided from then, and we need to talk about why. If you actually look at the chart, you can see that we are down on the day. We're down 0.5% on the day from where we closed yesterday, and a lot of people are very confused because they're expecting this massive gamma squeeze to be shooting us up, and that's what it looked like was happening in early morning trading, right? We saw a little bit of volatility the first couple of minutes, but then we began shooting up, broke past this 870 resistance level. You can see we formed that a couple of weeks ago around here when we initially started subsiding. It formed itself as a resistance and a support a little bit when we were trying to maintain that level. But since then, we've broken down past it and it has acted as a bit of resistance for us. Now, that's not why we haven't been able to pump up, right? That's probably contributing to it. That's probably where some institutions are trying to push us down from. But there are some likely reasons why we haven't been able to pump up as much, and I think that it's likely due to institutions coming up with some, I guess you could call them carefully concocted plans for how to keep this thing down, because a lot of people were expecting this big gamma squeeze. When you see all the open interest call options that there are, a lot of people were expecting this stock to run up massively because a lot of them just became in the money, and the expiration date for those options is today. So why wouldn't this stock be moving up massively when we were up, I believe, over 20% yesterday, when we saw a massive spike up in price, maintain that level? We still haven't sunk that much, right? We're only down about 0.1%. We're down very close to where we closed. And it would make sense that, we would continue running up quite a bit, especially considering the fact that the short interest has gone down, right? Fewer people are shorting this today. Shorts have covered some of their positions today. Obviously, institutions are doing something. So what could they be doing? Why are they not, having to cover all of these likely naked call option contracts that they've sold? So first off, I want you guys to think about what you have done with these call options, right? Likely people watching this video have been buyers of call options in the past. It's likely that you guys were buying them maybe around here or so, and or even around here, and you saw this massive spike up. Maybe you were buying more around here. And what have you been doing since then with your call options? Have you been buying more call options, or have you been selling your call options? Because that will give us a bit of a hint as to why this thing might not be running, right? If a lot of people are selling their call options today, then that is greatly decreasing the pressure that institutions would have to face to buy up more shares of the stock, right? Because they're going to be less call options that are in the money, and thus less collateral that institutions will need to put up via shares to actually cover those call options. So you can actually see there's been massive volume on these call options. Some of these call options have more volume than there are open interest, right? 20,000 of these $8, $7.50, $8 call options have been traded today, and there are only 12,000 open interest. 26,000 of the $8.50 call options have been traded today, and there are only 9,000 open interest. So massive quantities of these call options are being bought and sold, and it's very possible that due to the relatively high short interest percentage of the free float, that institutions do not want to push this thing up anymore by buying shares to cover their call option positions. What's very possible is that institutions may actually just be opting to buy the call options themselves, right? To basically get rid of those positions just by buying the call options, forget about the collateral of holding the shares and waiting through expiration. Some institutions may be choosing to keep this stock price down by just buying up the call options instead and essentially closing out those positions. That may be why we're not seeing as massive of a rise as we were hoping for, right? We were up above $9 today before getting shot down, and some institutions likely realized, hey, we have very large short positions on this. If this stock does keep running up, then you can see based off the prior history, if we look back at the past 90 days, when it has run up in the past, it's been very violent, and that's been very bad for institutions that were shorting, and they likely didn't want the same thing to happen again. They want to keep this thing down. They don't want a lot of people piling into this stock as a momentum play as well, because that would just double the pain that they're experiencing, right? They're already experiencing pain from the threat of a gamma squeeze. They already have to buy up a lot of these call options or a bunch of shares, and if they buy up the shares, they have two options, right? They can buy up the shares or they can buy up the call options. If they buy up the call options, then they take a big loss on those call options. If they were selling them around here when this thing was relatively cheap. If they were selling them around here, then, they're probably still taking a win on those call options. But, if they were selling them, then they at these lower price levels, then they might have to take a bit of a loss on those call options. Probably a somewhat significant loss because call options are very volatile. But the other option would be to buy up shares to cover their position. Now that would in turn raise the price quite a bit, and thus their short positions on this stock would be in the red even more than they already are. And that would also inspire a lot of people to be searching for this stock, to look at this stock on StockTwits, right? It's already the number 2 trending stock, and it hasn't even moved that much. If this thing was up 10% or 20%, then it would almost certainly be the number 1 stock on StockTwits, one of the number 1 stocks on Reddit and Wall Street Bets. That would garner a ton of support for the stock. You can see that right now it's number 6 on Reddit and Wall Street Bets, but if it was number 1, then obviously a lot more people would be hearing about it, talking about it. You can see on Google Trends that BBIG stock is currently ranking the highest it has over the past week, right? We have a search ranking of 100. That's very high. That's the highest you can get on Google Trends. And, it would almost certainly be much higher than it currently is, right? There'd be a lot more search volume, and this would dwarf the previous days even more if there was a big price movement in the stock to the upside, right? People would be searching for it more. That's what we see time after time. When stocks start pumping, then people begin searching for them more, and it's almost a self-fulfilling prophecy that they continue moving up because more people begin entering the stock as a momentum play. Now, that would really hurt institutions, and it's likely, in my opinion, that they do not want to suffer that pain on their short positions. They don't want to suffer additional pain on their options contracts. They'd rather just close those out, I think, than end up pumping the stock up by buying up shares of the stock. So what we're looking at is a situation where, if you had call options, you're almost certainly making a lot of money, right? Especially if you bought them over the past couple of days. You can see, when this thing was below $7, you're almost certainly making money on this thing because now we're trading in the 8s. We were trading at 9 at some point, and what's likely, in addition to institutions buying up these call options, that has to go hand in hand with people selling the call options. So, instead of just opening up new call option positions and having another institution sell them the call options, it's likely that they were buying these from some retail people. And, as we begin to see this subsiding price, some people may begin deciding to sell more of their call options, leading to less pressure for the stock to pump. Now, obviously, there are still very many open interest call options. So not all of them have been closed. It's likely that a lot of institutions still have very many open interest positions in this stock. And it doesn't mean the gamma squeeze is over. It may mean right now that because the price is lowering, right, because we've broken through the 850 level, institutions don't have as much buying pressure to be buying up shares of the stock. They don't have to cover quite as soon. If you look at the 850 calls, there are 9,000 of those. The $9 calls, there are 23,000. So institutions really did not want this thing to be breaking $9. So obviously there is going to be some potential for downwards pressure, right? As those are no longer in the money, the $9 and 850 calls. However, institutions may, near the end of the day, have to start covering with shares if some retail traders are unwilling to give them the call options back. But it's a risky choice to make, because if you're a retail trader and you have these call options that you've bought when the stock was relatively cheap and you're holding them until expiration, maybe they're very close to being in the money. If you look at those 850 call options, they are still worth 23 cents and between 22 and 24 cents per share, right? Per options contract, which actually equates to 230 or 23 bucks, I think, per contract, something like that. Yeah, 100 times. So 23 bucks per contract. And if you have a bunch of those, they're out of the money right now. And if we don't end above 850, then all of that money disappears by the end of today. So it is a very risky position to have. And I could understand, a lot of traders wanting to close those positions, especially, for the ones out of the money. If you're in the money, you still have some residual value, some intrinsic value in the stock, but there is a lot of extrinsic value, basically the time value and the expectation that this thing could pump up a ton, and you could make a ton of money on it. I'm not saying you can't make a ton of money on these call options if you hold them, because it is possible that towards the end of the day, institutions will have to start covering. This thing may get shot up. But it is something to think about, right? It's a conundrum almost if you're holding these call options. I mean, especially the 850 ones. I'm glad I'm not holding any of them, because that would be somewhat worrying for me, right? Because obviously there's the chance that this thing could pump up, but there's also the chance that those could expire worthless. So you guys really have to decide for yourselves. This isn't financial advice that I'm giving you. You guys have to decide based off your own risk tolerance. Are you willing to take the gamble that by the end of the day, this thing will shoot up if institutions aren't able to finagle their way out of the situation and stop this thing from rising? It's possible that they can't, but oftentimes I've seen institutions kind of screw out retail. They know a lot of tricky trading mechanisms that they can use. I mean, they're not even really shorting to their fullest extent yet, right? They have actually been covering their short positions, and it's possible that they may decide to start re-entering their shorts, that by the end of the day, we could see a massive downward spike. If there's still too many open interest call options, they might try to push those out of the money. We'll have to see, we don't actually know what's going to happen in the markets until it actually happens. Now, I will say that something to watch for BBIG, in the future, if you do believe in this stock, if you have farther out call options, is the October 22nd date for the Tide spinoff dividend. That's another thing. We'll probably make a video about that in the future. I do want to point out that there are some positive catalysts with this. So other than that, guys, have a great day. I'll see you in the next one. And yep, there we go. I'll see you in the next one. Bye.